Hello, wonderful person. This is Chris for the Informed Stoner. It's Friday evening, time for our evening news report. Before we get into it, if you'd please like and subscribe, it would help the channel out, and I'd greatly appreciate it. Thanks. From the dailymail.com, turmoil at Silicon Valley Bank triggers market panic. Four biggest U.S. banks lose staggering $52 billion in valuation, and Dow drops 540 points. That is huge. Sharp loss in banking stocks led Wall Street's main indexes lower on Thursday as turmoil at Silicon Valley Bank parent company triggered investor fears about the stability of the financial sector. I hope that, it's just a scare and nothing serious, but we'll see what happens. The S&P 500 bank index tumbled more than 6% in the biggest one-day drop in over 2 years. After SVB Financial Group announced a massive equity raise to cover a $1.8 billion loss on the sale of investments. The four largest U.S. banks, J.P. Morgan Chase, Bank of America, Wells Fargo, and Citigroup, saw their share prices plunge between 4 and 6%, wiping $52.3 billion from their collective market capitalization for the day. Ooh, that's more money than I'll ever see in my life. Stocks fell broadly on Wall Street, with the Dow Jones Industrial Average dropping 543 points, or 1.66%. The S&P 500 lost 1.85%. The Nasdaq Composite was down 2.05%. That's horrible all around. Not doing good. Not looking good. Shares of the SVB Financial, which owns Silicon Valley Bank, plunged more than 60% as the company announced the sale of new shares to cover losses on the sale of government bonds. Ooh, that's rough. That bank is definitely feeling it in the pocketbook. SVB is battling cash burn due to declining deposits from tech startups struggling with venture capital funding drought. The company's assets and deposits nearly doubled in 2021, and the bank poured much of those funds into U.S. treasuries and other government bonds. But as rising interest rates battered the tech startup, the bank primarily serves declining deposits forced SVB to sell off bond holdings, which in the meantime had plunged in the market value due to the rising rate environment. So they're selling off these bonds they're holding. These bonds are worth nothing compared to what they should be. So they're losing money on top of losing money. The turmoil at the SVP sparked off sell-offs in peers with similar exposure, with San Francisco headquartered First Republican slumping 16.52% after hitting its lowest level after October 2020. Those are big numbers for these places. Big numbers. Declines at the massive big four banks, while smaller in percentage, dragged markets lower, with 5.4% loss of J.P. Morgan weighing more than other stocks in the S&P 500. The Silicon Valley raise got everybody nervous about capital levels and what deposits are doing. A lot of the institutional investors don't feel great about owning certain banks right now, and R.J. Grant, head of trading in Keefe, Burnett, and Amp Woods in New York. It just gets people freaked out because Silicon Valley historically has been a very strong, well-run bank. If they're having issues right now, people are wondering what other banks that are lesser quality and they don't have the reputation that Silicon Valley Bank has. Well, we'll see in the future with banks falling, going bankrupt, closing down. I hope it doesn't happen, but it might. SVB Chief Executive Greg Becker said cash burn by clients increased in February. A crucial lender for early-stage businesses, SVB is a banking partner for nearly half of the U.S. venture bank, technology, and healthcare companies listed on the stock market in 2022. While VC venture capital deployment has tracked our expectations, client cash burn has remained elevated and increased further in February, resulting in lower deposits than forecasted, Becker said in a letter to investors. The funding winter is a fallout of the relentless increase in the borrowing costs by the Federal Reserve over the last year, as well elevated inflation. At one point during the trading on Thursday, SVB stocks fell almost 63%, hitting its lowest level since August 2016, after the lender slashed its 2023 outlook and launched the share sell. The SVB turmoil raised investors' concerns about broadcast risks in the sector. Investors were also grappling with decline in the cryptocurrency-focused lender Silvergate Capital, which dropped 22% after saying late on Thursday it planned to wind down operations, voluntarily liquidate after it hit with losses following the collapse of the crypto exchange FTX. Well, that's a whole bunch of story in itself, the whole FTX nightmare. Shares in Silvergate Pierce Signature Bank fell 9.4%. Well, I don't know, guys. Let me know what you think below, and have a great weekend.